Let's talk money.
Hello and welcome to a brand new edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. Now, one of the key elements of a sound financial plan is having proper life cover. On the show today, we will discuss exactly how much term insurance, which is the purest form of life insurance, how much of it do you really need? The key factors to consider while buying that term policy and ways to ensure smooth claim settlement. To talk about all of this, we have with us on the show today Mr. Satishwar B, MD and CEO at Bandhan Life, and Surabhi Singh, Joint Group CEO at PB Fintech. Gentlemen, thank you so much for joining in. It's good to have both of you in. Like I said, it's typically still April and we usually start with brass tacks, financial planning 101. And obviously, before we talk about investments and growing wealth, we need to ensure that we are adequately protected. So I want to start there. And Mr. Satishwar, if you could open for us. A lot of people feel that, and especially young people, right, that if I'm not married, if I don't have children, why do I need to bother with life insurance? Your opening thoughts.
As for me, insurance is actually a necessity. Okay? And to be very broad, frankly, or broadly put in, life insurance basically takes care of two specific needs, right? And in a very, very broad segment, it's basically called as either dying too young or living too long. Okay? These are the two broad spectrum which actually covers. Now, what do I mean by dying too young, right? So when you're pretty young and you just started your work, you have not yet created a corpus, right? Ideally, you should also parallelly start creating a corpus. And the initial years, you have not yet created a corpus. And in that scenario, if death occurs, right, and there are dependents on you, then there is a financial burden on the rest of the family members. Now, this is where exactly the life insurance component, the purely life insurance component comes in. But having said that, right, there are also a lot of living benefits which comes with life insurance, right? With the life term plan, you can actually add some riders in terms of, say, critical illness cover, those kind of things. That's one. Also, as I said, the other big component is towards your living too long. So you start building a corpus, especially the long-term products, right? That's where you start building the corpus. So life insurance, yes, a necessity for all. And there are these two specific aspects which gets covered in that.
Oh, absolutely. Let me bring in Surabhi as well. Surabhi, good to have you on the show. And Policy Bazaar recently did a survey called How India Buys Insurance. And I noticed there were some nuggets there on term insurance as well. So tell us, Surabhi, is India buying more life insurance, more term insurance, yes or no? And what would your opening thoughts be? Does everyone need life insurance or only married people with children?
So thanks, Surabhi, for having us on your show. I think we just spoke to almost 4,000 Indians across, across cities and across states. And one of the things which is a bit frightening is that as much as half of the respondents were not even aware about term insurance. They were not clear as to what is the difference between term insurance and other forms of life insurance. And as you said in your opening remarks, that term insurance is the purest form of life insurance. And I think in a country like India, where right now social security, etc., doesn't really extend to the middle class, I think having term insurance is a very essential thing. So I think this is something that we've been now, every year, we've been doing this research, and we find that while there is some improvement, so obviously more people buy term insurance than bought in the previous year, but unfortunately that rate is moving very slowly. And perhaps that is because of some of the misconceptions. So like you said, that yes, people with children or with dependents, I would argue, must buy term insurance. Actually, it's not just about dependents, it's about liabilities. So let's say that even if you are a married couple without children yet, or maybe you don't plan to have children, you still have liabilities. You may have some home loan, you may have other liabilities, and anybody who has those liabilities needs to cover for them. And the second point that we also must remember is that it's a moment in time. Maybe today you don't have dependents, but you are likely as you go forward. Now, in that case also, it is important to buy term insurance as early as possible, because this is a fixed rate plan. The price is going to remain the same, and the earlier you buy, the lower rate you lock in, and you are able to then cover yourself, when you need it. So I would say that it's broader than just having children, and one should look at the term insurance category in a more holistic manner.
Yeah, absolutely. I think that's a point well made, that whether it's investments or insurance, the earlier you start, the better. That's where you have the, you run the chances of getting the best returns or basically the best coverage. But, before we go on and talk about the quantum of insurance, etc., sir, I want to ask you, Surabhi raised a very interesting point that even now, awareness about term insurance is pretty low across the country. Why is that? Because when it comes to health insurance, I think the message has gone home loud and clear that it's an expense. You pay that expense every year, hoping you don't have to make that claim, because if you want to be healthy, it's a necessary expense. वो खर्चा करना है to secure yourself. Why is that message not going through for term insurance?
So the term piece is basically, it's a very emotional subject, right? You're actually talking about death.
Yeah.
And nobody actually wants to kind of speak on those lines or actually even deliberate on those lines. So as for me, awareness, if you ask anybody what a life insurance is, I think they know that, right? But do you need life insurance, or do I have a life insurance? There you will find that 8 out of 10 people don't have it, right?
Yeah.
And so awareness in terms of what it is, yes, but the urgency and necessity to have it, I think that's what is lacking.
Yeah.
And the reason why it's a taboo kind of a subject, because I don't want to hear about my death. The very fact that I can die any moment is something which becomes a little difficult to register.
Yeah.
And that's one of the single most stumbling block or the challenge that we are also still trying to drive. And that's where I would like to actually, in a way, compliment Policy Bazaar on their messaging on those lines, right? They have actually brought on a very hard-hitting message in terms of why life insurance is specifically talking directly on the point. It's a very difficult message. So the messaging and people actually also starting thinking on those lines that it can happen to me, right? So that whole aspect of and the urgency associated with, that's what is lacking. So.
Okay, so let's get down to the basics. The whole idea of this conversation is to help you, the viewer, or the potential policy buyer, make the right decisions. First, a very clear definition. What is this business of term insurance that we're talking about? Term insurance, why do we call it the purest form of insurance? Because here you're not buying a policy expecting something to come back. This is not an investment product. You're paying the insurance company purely to protect your loved ones, your dependents, in the case of your demise. So now the first question, how much term insurance do I need? How do we answer that?
You can have a very wonderful, complicated formula to it, but broadly, and very broadly, when I say this, you will not be, you will be right more than 99% of the time. Is basically one is take care of your immediate liabilities, if any. Suppose if you have borrowings on you, that needs to be covered, right? That's one. Over and above that, term plan is an income replacement product, right? So when a breadwinner is not there, right? Naturally, you can't take care of the emotional aspect, but at least those whole financial thing, you naturally have working years, say, in a very broad sense, it's 60, right? So you will work till age 60, so you're going to basically generate income over those number of years, right? And that is what is covering. So suppose if something happens at age 40, for the balance 20 years, that is the income stream is stopped, right? That needs a replacement. Now, that's where term plan comes in. So the most simplest way, broadly we say 10 times, 20 times, but the way I define it is your working age, say 60. 60 minus your current age, right? That's the multiple. So suppose if you're 30, 30 times of your current income, very broadly put in.
30 times your current income.
It's basically
it just covers you till 60 years of retirement.
So whatever your balance working years, that's your multiple.
Okay.
Right? And you will actually see that even in life insurance companies, the younger you are, the multiples are higher.
Sure.
Right? So if you are a 40 plus person, then naturally the multiple will be a little lower. But if you start early, say 25, your multiple will be much higher. Very broadly, your current income into balance working years is a simplest form as per me.
Okay, fair enough. Surabhi, let me ask you, is that a rough formula that you would go by as well? And then maybe some examples. I mean, someone who is 30 to 35, typically, what's the quantum we're talking about? How many crores of this sum assured are we talking about, and how much will it cost?
Yeah, so I think, Surabhi, I completely agree with Satishwar that, one can complicate this subject very much. There's jargon like human life value calculator, etc. But I think more than that, I would say two things. One is, like he said, go with a multiple. I have an even simpler rule of thumb that if you are below 40 years, then you should have at least 15 to 20 times your income. And if you are above 40, then maybe it should be 10 to 15 times. And the second thing that I would also say is that we should start. See, one of the problems is that insurance is a category where, one can deliberate a lot. One can keep discussing, thinking about it. My suggestion to your viewers would be that term insurance is essential. Please start. Let's say that you are today earning 15 lakh rupees a year or 20 lakh rupees a year. You can even start with 1 crore, 1.5 crores, 2 crores of term insurance. Very relatively easy to get. There's not much problem. If you're 30 years old, if you want to get 1 crore, the cost will be in the range of 1,200 to 1,500 rupees a month. So very, very affordable premium as well. So I think the main thing is start. There are many plans which offer features like as your life stage changes, as you get married, as you have children, you can actually increase the life cover, and obviously you'll have to pay a little bit extra for that. So I think there are many ways of improving the life cover, but first thing hesitation that I feel is that we just don't start. So I think it's very affordable. Term insurance, interestingly, is at this moment is cheaper in India than in many developed countries. So it is surprising, actually, if you think about it, because sometimes one would expect that it would be cheaper in countries where the longevity is higher. But still, given the competition, given the I would say relative value that term insurance offers in India, I would actually say that it's a really good deal from a customer perspective, and it's something again every customer should have.
In ballpark, I know this will vary greatly across companies and specific ailments, etc. But roughly, if you're talking about a healthy individual in their early to mid 30s, what would the annual payout be, premium payout, for a cover like you're saying, maybe a 2 CR or a 5 CR cover?
So it would roughly, for 1 crore for a 35-year-old, it would be in the range of 25,000 rupees a year, so 2,000 rupees a month. So for 2 crores, you can increase that. It won't double. It will be probably 3,000 to 3,500 rupees a year, a month. It's very, there's a wide variety of covers that are possible. So if you come to Policy Bazaar, you can see the range of options that are available to you. Different brands, different, companies have different prices. But generally speaking, as a rule of thumb, I would say that 1,000 to 1,500 rupees per month for 1 crore and maybe 2,500 to 3,000 rupees a month for 2 crores for a healthy 30 to 35-year-old person.
Oh, fair point. To add to that, what Surabhi just mentioned, that maybe you realize that your insurance coverage needs are increasing with life. I mean, it was just you, and now you're married, and then maybe you're planning a family, and you realize that your current policy isn't enough. So what should one do? Should you look at adding on more policies, and then hopefully, if at all you need a claim, then you claim through multiple policies, or do you kind of add on in the existing one? What's the way?
So the ideal one is basically you buy a new policy. Add on to the existing one can also happen, but it basically goes through the same process.
Okay.
Even within the same life insurance company, it will be a new policy.
Oh,
right? Because if it's a standard premium, right? So you just can't add on to that, but the process becomes easier.
Okay.
Because naturally your KYC and all those things are done.
Yes.
It's more to do with the immediate evaluation and those things. But my take on this is a little different. So as I said, right, it's basically an income replacement, and it basically is supposed to take care of dying too young, right? So as an individual, one is of course it's a risk mitigation product, as you said, right? It's an expense.
Yeah.
So when you're young, you haven't not yet created a corpus.
True.
Right? And that's a reason in case of sudden demise, there's a huge burden in terms of those whole financial income being lost.
Yeah.
In parallel, you're actually supposed to create the corpus.
Yeah.
Right? So if you are at say age 45, 50 or even closer to that number, you have already created a corpus. So your life insurance need at that point in time should also take care of the corpus what you have, in the sense, rather than take care, while you evaluate, you should also consider the corpus that you have. And the difference is what
investments and your existing corpus.
So buying early ideally takes care of it. You have been, if you have been parallelly creating a corpus.
Sure.
So the very fact that now you see everybody we have a specific thing called a special exit plan. Now that's what is in mind. If you have created a corpus for yourself, you don't need a life insurance.
Sure.
Right?
Sure.
In that case, you can actually take the money back. Right? The special exit value,
these exit plans, exit value plans, that's
the
what
special exit value is what we call it as, right? So that the intent is that you ideally should create a corpus in parallel, and that should take care of it, rather than continuously talking about my income is now growing
your policy
and those things.
and then therefore increasing your policy as well.
True. So that's a much more planned activity, rather than just ensuring that whatever is my earning, I should get.
I really compliment you, sir, for saying that. From a boss of a life insurance company, that's such honest, genuine advice. That as we grow older, our income streams grow, our wealth creation journey also grows. Typically, the wealth creation corpus should take care of a bulk of the life insurance needs as well, and instead of adding on more and more policies. That's a very, very logical point. We need to take a quick break on that note. Come back on the other side, and then the nuts and bolts. How do you ensure that your claim gets settled? What do you need to disclose? We'll talk about all those issues on the other side.
Let's Talk Money